incumbents who are sitting there are also undergoing this massive transformation, and they themselves are morphing into what is basically now more and more a fintech company in terms of the way it looks, it feels, the way it speaks, the way it talks. So today when we think of even our stock exchanges, right? To us, it's very clear. A stock exchange is a fintech company. When we think about our mutual funds and we look at, the way some of the platforms have been built in terms of MF Central, which is a collaborative effort which has been put together by the entire industry. Again, we find that that platform is nothing but a fintech in terms of its substance. So to me, I think that this morphing of incumbents, in fact, has a huge advantage because they have the cash flow of their traditional businesses, they have the manpower, they have the stability of their traditional businesses, and yet when they put their mind to it and they actually apply the principles of modern technology, modern design thinking, they actually morph into these new rocket ships. So even as we speak, this transformation is ongoing. Many of you are aware that India is the first jurisdiction in the globe that has moved to T+1 settlement. We are now talking about 1 hour settlement, and even that is really a stepping stone to instantaneous settlement. So you will see, and this will be all in a reasonably short period of time, something that is traditional is now going to morph into something which is very, very modern and very, very contemporary. In all of this, the concept of time is something that we believe is crucial, and this is where we believe that the role of fintech plays in. I already talked about T+1 to instantaneous settlement, but equally, this concept of time where things used to be tagged on a calendar, saying you will do it in so many days, is now a matter of looking at the hourglass and saying we'll do it in so many minutes. And this is true not just for the market, but also for the regulator itself. So just by way of a few examples, today if we look at the execution-only platforms, what we have recently issued guidelines on for the mutual fund industry, the whole idea is again to morph from something that used to take days in the physical mode to being instantaneous. We've also, for the bond market, because for the longest time, SEBI has been looking at how do we make the bond market more vibrant. The new facility of creating online bond platforms is something which again addresses the issue of time, addresses the issue of convenience, and therefore, we believe, leads to greater and greater innovation in the market. In everything that we do, and in every new regulation that we bring about, what is our fundamental principle and objective? As a regulator, we believe that technology is extremely powerful, and why is it so powerful? Is because it allows you to optimize all the 3 gears that we consider critical in the markets. The first is risk. The second is convenience for the customer, and the third is cost. Now you may wonder as to why as a regulator, why should we worry about cost? But we do. Because one of the critical objectives that we have as a regulator is to actually develop the market, to expand the market, grow the market. And we know that financial inclusion is critical to be able to do that. And if that is to be facilitated, the cost of actually running the business has to come down. So in everything we do, whether it is in terms of platforms that we approve, whether it is in terms of timelines that we approve, whether it is in terms of the time we take to give approvals, we are extremely conscious of the fact that time is critical and all the costs are critical, including regulatory costs, and therefore the need to use technology to optimize on all 3: risk, convenience, as well as cost. But when we think about these issues, we also believe that there is tremendous power in entities coming together to build a certain capability for the ecosystem as compared to the cost of each entity trying to build it out on its own. Not only that, we find that in certain cases, it is simply not possible for an individual entity to actually create what it needs to on a standalone basis. Let me illustrate with a simple example. Over lunch, we were having discussion about cybersecurity, and I said that, at SEBI, we have a somewhat non-classical approach to cybersecurity. What does that mean? It means that we are very cognizant of the fact that it's very easy for us to write a piece of regulation. But finally, the regulation will be successful only in the hands of the practitioner. And if the regulation does not make sense in the hands of the practitioner, it's really not worth the paper it's written on. So, when we look at something like cybersecurity, it is our belief that if the attack is strong enough, the attack can probably penetrate any system. It's only a question of who is attacking and with what strength. The reason being that if you have built something which is completely impenetrable, you have probably compromised on the convenience factor for the customer. Right? So in the desire to optimize convenience for the customer and, in this case, cybersecurity risk, chances are you have built something which works most of the time, almost most of the time, but under certain circumstances perhaps can be penetrated. Now, what do you do then? Two simple examples that we at SEBI have implemented through the technology of the market ecosystem. The first is at the clearing corporation level, which broadly people appreciate and understand as at the exchange level, where the exchanges and clearing corporations have implemented something that we loosely refer to as the SaaS model. What it means is that if one exchange, God forbid, goes down, the clearing corporation goes down, God forbid, still trading will continue. Why? Because firstly, we have a natural advantage that almost every scrip is listed on the second exchange as well. So trading can continue. But the problem historically always was that settlement cannot happen at the second clearing corporation, and the interoperability that we needed would not come into play if one system was completely down. So what we have now facilitated for the clearing corporations to do is that the data of one exchange actually physically resides on the premises of the second exchange and is instantaneously updated real time. So that if one clearing corporation goes down, that data is taken and actually uploaded into the software system of the second exchange. So there is complete immunity. So if the software of the first exchange is contaminated, it has been penetrated, there is no problem. The data is uploaded into the software of the second exchange, and life would go on as usual for all the participants in the market. Now, when India shared this in an international forum, ISCO is a forum where all the market regulators meet periodically, they could not believe that this could happen simply because they could not believe that the exchanges would cooperate and the clearing corporations would cooperate no matter what the desire of the regulator. And therefore, I need to call out the fact that the ecosystem, the exchanges and the clearing corporations had the maturity to appreciate that if there is a cyber event and if one exchange or clearing corp goes down, it does not help anybody. And the fact that we actually have a cooperative system where they work together for one clearing corp to be the backstop for the other is actually just good for the ecosystem as a whole, good for the Indian stock market as a whole, good for the country, and individual competition and egos simply have no place when you're looking at saying that our first and principal responsibility is to make sure that the markets do not stop. So full marks to them for that. A very similar arrangement which is currently in the pipeline is also to facilitate that what if a broker goes down? Because as we know, today the market has some very large brokers, and there is a significant risk attached to their being down, and a very large number of investors simply not having the ability to manage their positions. So we now have a mechanism which is in the works and which is being in the process of implementation, which is that every client of the broker, if the broker goes down, will be able to have direct access to the exchange in order to manage his position for risk reduction and to close out his positions. He cannot take fresh positions, but to close out his positions and to manage that risk, he can actually go there directly to the exchange, even if the broker is down. So this is what I mean by a slightly non-traditional approach to cybersecurity, which is much more a community approach, ecosystem approach. It's a I have your back, you have my back approach. It's not a I, me, myself approach. And we think that as a market ecosystem as a whole, the entire ecosystem has really stepped up to make this a reality, and we're extremely proud of the ecosystem that this has actually happened. The next thing that I would like to talk about is, I'm sure, something that's been talked about a lot in this space, which is artificial intelligence. And I would like to share with you what we think is going to be the role of artificial intelligence going forward, both in the marketplace and therefore a huge opportunity for fintechs to come in and build their products and services, as well as an opportunity for the regulator itself to improve the way in which it does regulation and to improve the manner in which it actually makes life easier for the ecosystem. So first on the regulator, this is a very typical thought process which is prevalent in the mind of a regulator, saying it takes just one bad apple to ruin the whole pie. And many of our regulations have traditionally been based on this assumption. But we believe that this assumption is now ripe for disruption, just like business models commercially have been completely transformed by technology. We believe that this thought process of the regulator also is ripe for transformation. Why is that? Because this one apple, which in the past we had evolved in two ways. First was one size fits all, one regulation for everybody. With the help of technology, we have today reached the stage where we do at least segmentation. So of course, in common parlance, it's called risk-based. So not only risk-based supervision, but also risk-based regulation is what the regulator is moving towards, and saying that if there are different segments that carry different risk, then we should be able to even have regulations which are designed accordingly. So for instance, we have recently announced that we are going to have a regulation called Mutual Fund Lite, LITE, which means that the entire rule book which governs mutual funds will be down to 10%, because certain kinds of business which mutual funds do, like for instance passive investment, do not need the whole rule book at all. So a segmented approach is something that we had already moved into, but what artificial intelligence will allow us to do is to actually differentiate between the good apple and the bad apple at a much more granular level. And therefore, we believe this will allow us to take regulation to a level where the risk management will be almost custom fit for the entity. So it will become a situation where if the entity has really managed its risk well and has demonstrated all the parameters of being a good apple, then the level of regulation that will apply, the level of supervision that will apply, and so many other things that would apply would automatically be of a lower level. So this move of risk-based supervision to risk-based regulation to segmented regulation to now very granular level regulation is something which we see that artificial intelligence will have the potential to give us that ability to do that and therefore make life a lot easier for all regulated entities. But even more importantly, I think that the biggest opportunity that fintechs today have in the markets is that over the years, the regulator has focused on, and that has been its principal mode of regulation, is disclosure-based regulation. And we know that internally within SEBI, we were at times questioning ourselves that have we made disclosure reach a level where it has become information overload? Has it reached a level where people now actually cannot make out what they are supposed to make out of the disclosure? This was a thought that was worrying us. But now, as we see the way that artificial intelligence is evolving, we believe that whether it is in the space of disclosures made by listed companies or by mutual funds or by PMS managers or investment managers, anybody in our domain, those disclosures, if artificial intelligence is applied on them, this can become the tool for giving very, very high quality input and advice to possibly every citizen of the country at a very, very granular level. This is the potential that we believe that artificial intelligence and fintechs can leverage. Today, we have at SEBI already declared that data in the markets is a public good. It is infrastructure. It will be owned by the citizens of the country. So every piece of data that is mandated for disclosure by the regulator is available free of cost, conveniently downloadable with archives, and that is the mandate and the commitment that SEBI has made. I think we are about 70-80% of the way there. The balance 20% is in the works, and most of this is now being pushed in the form of being sure that it is machine readable, XBRL filings, etc., etc. And so the dream is, and that is what I would invite each one of the participants in this FinTech conference to really think about, that the big opportunity now is that what people consider an information overload in terms of market disclosures that the regulator mandates is actually a gold mine waiting to be analyzed, interpreted, insights to be taken, and then to be monetized by way of giving high quality advice to a vast, vast variety of citizens in our country that need that advice. So that's the opportunity before us all, both for the regulator and for the market and for the country. And I look forward to questions that you may have regarding anything that we do in the markets.
Thank you, Ms. Buch, for that exhilarating set. Very, very informative. Thank you once again. Ladies and gentlemen, it's now time to acknowledge, venerate, and recognize few of winners.
Some questions, and then we'll come to that.
Okay.
Thank you. No, we don't want to miss some opportunity to ask you some questions, ma'am. And so I had some questions, and to a large extent, all of these questions are answered. So I'm going to make up some of them. One of them is SEBI has been a very, very innovative regulator. One of the things that you've done is the innovation sandbox that you've announced. And there's quite a few projects that I've already seen that's happening. Do you care to speak a little bit more about, for fintechs, how this innovative sandbox can be used?
Certainly. So, the concept behind the innovation sandbox was that when a young company with young people wants to do something innovative, the first challenge that they face is how do they get the data and access to the ecosystem to be able to test out whether their application works or not. And therefore, what we did was to make this ecosystem, the APIs, the system itself, from our exchanges, our clearing corporations, our mutual funds, all of this to be available for testing along with test data. So if anybody needs to come and try out their idea, here is a place that you can come and try it out. And in fact, I think what we are happiest about in this is that the eligibility criteria for this is practically nil.
Right.
I think finally we came to the conclusion, if you do your KYC, it's almost like that. You do your KYC and get started. That's it.
And you don't need to be a regulated entity. Eventually, you need to be regulated.
So in the innovation sandbox, you don't need to be a regulated entity. We have a regulatory sandbox where you're actually allowed to go and operate in the live environment. For that, you need to be either a regulated entity or tied up with a regulated entity, because the SEBI Act doesn't allow us to do otherwise. So we are constrained. But you can tie up. But that's in the live environment.
Right.
In this test environment, nothing.
No, that's fantastic to hear, ma'am. In fact, last year, some of the global players also have shown some interest, and they wanted to know if they can use the regulated sandbox. But this innovation sandbox, I think, is a good place for them to start before getting regulated. Ma'am, you kind of touched upon a very interesting concept called traditional morphing, and that's the word that you used. And you gave quite a good example of virtually everybody is a fintech today. But what are your asks for the fintech industry today, ma'am? I know you mentioned about the risk data and a couple of others. But what are your asks to the fintech industry?
So, our life as a regulator is quite simple. So, our ask is on two fronts: what we would like to see them do and what we would like to see them not do.
Okay.
So, what we would like to see them do is quite simple, that if what you are doing will democratize the markets further, we have all the time in the world for you, because that is our objective. It's part of our mandate. It's why we are here. It's there in the preamble of the SEBI Act. So what we would like to see you do is to take the markets to more and more people across the country and do it at a low cost so that it is inclusive in nature, is what our ask on that front is. What is our ask on what you should not do? It's equally simple. And I will actually quote a parallel example before I come to specifically answering this question. Long ago, somebody asked me the question of, what do you think is good governance? And I had a very simple answer. And I think Economic Times is going to love me for this, but I actually made this statement saying that when you are about to do something, you already know that tomorrow what you have done, if it is reported on the front page of Economic Times, and your mother-in-law calls you up and says, "Beta, ye kya news aayi?" Will you be able to hold up your head high and explain to her, or will you decline the call? You know. So, it's not important to define what good governance means. You just know when you are doing it, whether this is something that will embarrass you or something that you will be able to hold your head up high and explain. So I think my ask from fintech is the same. What you are doing, if you are building a platform that allows people to literally seduce people into the market and make them lose their shirt, and then you say, "I'm only a platform," but there are thousands of people who are losing their money, their hard-earned money, because of what you are doing, You don't need a regulator to tell you.
No.
So what does your conscience say? Would you recommend your service to your mother-in-law? Ask yourself that question. All the people you are supporting on your platform, would you recommend that your mother-in-law deal with them? You know.
Yeah, I think that's a fantastic point, and I want to take a little bit of a cue from what you said, ma'am, is about fintech influencers or tech influencers. I know SEBI has been working around that and trying to come with it, and we've also done a hackathon trying to understand some of that. What are you thinking around that, and what is that we can expect in coming days from there?
I think we have recently expressed through, we express ourselves through consultation papers, and we have expressed our view to say that, we respect that there is freedom of speech in our country. We respect that there's freedom of expression. We respect that if people are doing genuine education, we respect all that. We have no problem with it. But if it crosses that line and becomes enticement, entrapment, fraud, then that's not okay. And as far as we are concerned, if somebody says, I'm a tech platform, we're okay with it. We have no desire to bring all tech platforms under our jurisdiction. But if you are not following our rules, then the people who are following our rules, the people who are registered with us, they cannot have any dealing with you.
Absolutely.
So it cannot be that people who are expected to follow the rules and do follow the rules partner with people who have no rules.
Right.
Because then by definition the whole ecosystem doesn't have rules. So we are very clear. If you wish to stay outside of the purview of SEBI, we have no problem. You have freedom of expression, no problem. But if you wish to deal in securities and if you wish to partner with people who are regulated entities, then there need to be rules. So you need to come register with us and so on and so forth. If you don't do that, then registered entities cannot have any dealings with you. So that's the expression of intent that we have made through our consultation paper, and that is what is currently under
Makes
discussion.
quite a logical sense, ma'am, and it's good to bring that regulation quickly. But I will stop my questions. I'm sure there'll be lots of questions from the audience. Probably we'll take a couple of questions because we also have a award ceremony after that. Anybody wants to ask a question? Yes, the lady in the front row. Yeah, if you can pass a mic to her. Can we start with the lady first, please? Yeah, thank you.
Hi, ma'am. Two questions. First is, as sir mentioned on the innovation sandbox, there have been only one application which has been approved till now, and I think 10 others have been rejected or withdrawn. What exactly are the challenges on the regulatory side that you're seeing based on the applications that are coming? And the second question is on the AI for granular supervision that you mentioned. Could you shed some more light on that? Thank you.
Sure. So I think that, we have perhaps not taken enough measures to explain and popularize what our innovation sandbox is meant for, and so we really welcome a forum like this to explain that. So there are three broad conditions that are required if you need to do something in the innovation sandbox. One is that your eligibility, as I said, is near zero. You just do KYC, you come. That's one. The second is that it needs to be something new. So very often what we find is that the applications which are coming are actually not new at all. They are existing things which people want that they should come in and be able to do without sort of so I'm saying, for instance, let's say somebody I'm taking a very plebeian example. There are already regulations for brokers. Somebody wants to come in and do broking itself. No matter what they may put on the application, when you have that discussion and debate with them, it's basically a form of broking only. So in which case there is a normal route available to you and you can come through that normal route. There's no need for you to come through this platform is one of the principal reasons why the applications get rejected. The third one is where the ask is for something which the Act does not permit. I'll give you an example. Something that we were very keen to do, we could not do. So for instance, fractional shares. Now, somebody came with that. We thought it was a good idea. We would have wanted to welcome them into the innovation sandbox. But it is not permitted in the SEBI Act itself. Now, until we change the Act, and by the way, not just the SEBI Act, the Companies Act. So, until we change the Companies Act and the SEBI Act, even if we let them into the sandbox, it's not going anywhere from there because the law simply prohibits it. So, but taking the learning from that, we are actually looking at saying that in the SEBI Act, is there some way in which we can now incorporate something of this nature? So these are the basic, reasons why things do not, I would say, progress. But I think the reason why we don't have more interest is because we haven't really reached out. And I think it's our task to reach out to people and say, this is the facility available and you can come and try out your stuff here.
Yes,
Sorry,
thank you.
What was the second question?
Yeah.
On the granular assessment or the supervision that you mentioned.
Yeah. So, we have already done this. I would say we've built algorithms, but we haven't yet started applying artificial intelligence, which I think we will move in that direction. Some of my younger colleagues have promised that to me very soon. So I'm hoping that they would have, they would be advanced in some of their thinking on this. And all of this work, by the way, is done internally in SEBI because we find that we have that capability. The youngsters have the domain understanding as well as the technology smarts, and they're able to do this. So, for instance, in the mutual fund industry, in the past we used to have a very traditional inspection process where the auditor would show up and he would go through your books and then take a sample and then, do the inspection, and there would be fights about the interpretation of the law, and there would be a lot of up and down and allegations and counter allegations, and 1 year will go in that, then one report will come, then it will show up in SEBI, then SEBI will look at it, then another 6 months will go in that, and then finally something will come out of it. All very Baba Adam. Okay. Now, what we have moved to is that we have said in a very transparent way, we've told the industry that, look, here are our 80 regulations, and there are actually 80. Let me stand up for a moment. There are actually 80 of them. So we've developed 80 algorithms, and we've shared this in a very transparent way with the industry to say, here is the logic. Because when you write an algorithm, you have to clearly articulate what is your interpretation of the law. They cannot be if, but, then, that, this, nothing. When you write it as a piece of software, you have to be very clear about every case, every scenario, and the logic that will apply. So these algorithms were written, 80 of them. And today as we speak, every quarter, first of all, every month the mutual funds give us their data. So SEBI ingests the data, keeps it. Every quarter we run these 80 algorithms, and at the end of it, each mutual fund gets an Excel sheet in their mailbox. When they open that Excel sheet, there are about 20 tabs relating to different regulations covering mutual fund. When you open that tab, either it will be nil, which means congratulations, no violations at all, or it will say, here are 5 records. On such and such day, you did such and such transaction which violated such and such regulation by so much amount, and this is your penalty. Now, when we first implemented this, there was an interactive way of sorting it out. There were a small number of false positives. The algos were refined. Today, as we speak, this 80 is going to about 100, and there is no dispute. There is no difference of opinion. Everybody understands this. And because people now understand the logic and the interpretation of the law, they are taking preventive action beforehand. And as compared to our first few runs, we hardly find a handful of violations now. So it has worked excellently for everybody. There is no wastage of time and management bandwidth on the stupid audit which is coming and inspection which is happening, all a thing of the past. And whatever it is, it's in black and white, well known, understood, and that's the end of the story. So we are actually moving to doing this across the board for almost every regulated entity, and therefore, but I still say this is, as you can imagine, these are algos which are written in a very rule-based manner. As we move into more sophisticated supervision, so for instance, we are working on this question of misselling. Now, misselling may happen by a mutual fund distributor or a agent or whoever, which is the responsibility of the mutual fund. Now, this is not a straight algorithm. You cannot write a rule-based logic for this, but you need a certain amount of intelligence which is layered on this. So we are now working to see that how can we develop algos which have inbuilt intelligence to recognize that if you have, invested, or if you have sold, a very high-risk, long-gestation product to a 90-year-old. By the way, we actually found such a case, 7-year lock-in period for being sold to a 90-year-old person. Now, at the very least, this is an alert for misselling. It may so happen that this person is very well off and this is part of his or her legacy planning and he has no need for the money in the next 7 years. It's possible. But at the very least, the intelligence should tell us this is a potential misselling. So as we move into layering artificial intelligence over the data, we hope that we will also find the ability to monitor these kind of things in the interest of the investors and not just the simple rule-based things.
No, thank you so much, ma'am. That was very big explainer and also tells you how passionately that you're looking at this particular project. And we are on the receiver end, so we know what happens there. In the interest of time, one last question and then we will take on maybe somebody in the back. Because most of you are in the back, I wish you were all in the front, but somebody in the back can ask a question. Yeah, one question, last question, please. Can you pass the mic there in the center of the hall, please?
आपका नील रिपोर्ट आ रहा है ना सर?
Yeah, please ask your question.
Yeah. Good afternoon, ma'am. Thank you for explaining the do's and don'ts very well. When it comes to payments and lending, I think inclusion has already been taking place and is growing at a fast pace. But when it comes to investments and wealth advice, probably only the top 1% elite really have access to good advice. The remaining 99%, for whom maybe digital platforms are needed, are still buying products. There is no solutions orientation. And my request would be if you could do things wherein ease of doing business could be provided, awareness can be created, because 99% people probably don't even know the difference between registered advisors and unregistered advisors, and a level playing field could be provided between the various intermediaries. Then I think the democratization in investments also can happen, truly happen, and happen at a fast pace. Thank you.
Yeah, I completely agree with you. I couldn't agree with you more. And I think that that's absolutely the need of the hour. We are very, very keen to do this. As I said, unfortunately, what we have seen in evidence right now is the bad apples. We would really urge the good apples to come forward. We are wanting to see more and more proposals which are the good apples coming forward to say what is it that you think we need to do, what are some of the structures you would like. One of the things that we have recently proposed is that there be a performance validation agency, because all advisors have told us that how can we sell a product or advice or a service to anybody if we are not able to make a claim about the performance of what we do. And we agree, because we understand that a business has to be built, you have to sell something to a customer. But it's just that, as I said, if you claim performance that your clients make 5 crores a month, that's not the kind of performance that we think is validated, to say the least. And therefore, structurally, we are trying to find solutions structurally that the good apples, there are lots of good apples, we're looking for those good apples to come to us and say to us that what is it that we can do to facilitate that you actually come in and give genuine advice to people. It's not simply an enticement mechanism and a machinery to entice people to come and trade in FNO and lose lakhs and lakhs of rupees while giving brokerage of many thousands of rupees. That's not the intent, right? That's not your intent, not our intent if you're a good apple. So in short, we would really, really love for you to come and share with us as to what you would like us to do. But we cannot have a situation where enticement and entrapment of investors happens. That's simply not an acceptable option.
No, I think that was a perfect note to end this Q&A, ma'am. What we will do is take 2 minutes and explain about the hackathon that SEBI kind of sponsored and we were able to do. If you can just talk about the hackathon and we'll call the winners on the stage and then wind up the session. Thank you.
Yes, so now we'll be acknowledging the winners from Hackathon, which was done in association with SEBI. The idea is to acknowledge people whose work, whose tech prowess really stood out. We're giving a check prize and also the certificate to all the winners. So let's begin with our first runner-up, and the winners team is Catapult, and I'd request Mr. Shreyansh Pawar to make his way on stage to receive the first runner-up award. Shreyansh Pawar. Mr. Shreyansh Pawar from Catapult, if you're around. All right, ladies and gentlemen, like ma'am was saying, there's a lot of young talent doing a lot of riveting and promising work. So I think it's a moment of acknowledgement. So let's really cheer for them and make sure we acknowledge them in full throttle. We have our first runner-up of SEBI Hackathon, Team Catapult, Shreyansh Pawar.
Well done.
Congratulations, team. Now it's time to
All the
announce
best for the
our
future.
runner-up, and the winner is Team Emperor. Can I request Hindesh, Akash and team to come on stage, please? Ladies and gentlemen, these are young talent who are redefining the ways of using tech with all the compliances in order. So let's make sure that their acknowledgement, their veneration on such an important stage gets acknowledged.
God bless you.
Team Emperor, we have with us Hindesh, Akash. Congratulations.
Well done.
All right, it's now time to call the winner on stage. And the first prize, the winner of SEBI Hackathon is Team Devesh. Can I request Devesh Chaudhary to make his way on stage, please?
आप सूट पहन के आए, मैंने सोचा जीन्स और टी-शर्ट पहन के आए.
We are felicitating all the winners of SEBI Hackathon with the intent of finding the best hacking talent, people with great technical prowess. Congratulations.
I just wanted to take a minute because I thought she's going to announce, but she did not. We had one of the most fantastic hackathon this year, ma'am. We had 2,500 entries coming for this track that we had. One was on building a curated experience for content, and the second was on finding out contents which are not in line with regulations. So there was a very interesting 2-track hackathon, and 250 final entries were kind of considered, and 85 winners were given a choice.